Hello and welcome to MC Pro Stock of the Day with me, Stacey Pereira. In this segment, we bring you some fundamentally strong stock ideas that you could consider in your portfolio. Today's stock of the day is Tata Consumer Products or TCPL. It did make headlines recently because of its two acquisitions of Capital Food and Organics India, and we will talk about that in detail. But first, let me give you a quick brief about the company. It has an array of products under its portfolio, including tea, coffee, salt, water, pulses, spices, and others. Its food portfolio includes brands such as Tata Soulful, Tata Samparna, as well as Tata Salt. So, what should your investment rationale be if you are to consider TCPL? Firstly, it has an increase in the addressable market size. This considerably post those acquisitions of Capital Food as well as Organics India. In fact, Capital Food improves its addressable market size by about 21,400 crore rupees. The market is likely to grow by a 13% CAGR till 2027. And for the uninitiated, Capital Foods is the owner of Ching's Secret as well as Smith & Jones. And Ching's, remember, is a market leader when it comes to Desi Chinese across its product categories. Smith & Jones, on the other hand, is too a fast-growing brand catering to in-home cooking in the Italian as well as Western cuisine. On the other hand, you have Organics India, which too is into food and beverages as well as herbal supplement products. This acquisition increases TCPL's addressable market size by about 82,000 crore rupees, which is 7,000 crore in India and the 75,000 crore via international markets. Both the acquisitions have been done around a 7.5 to 8 times the enterprise value to sales ratio based on FY23. Both companies enjoy the gross margins of more than 50% as well as EBITDA margins of more than 20%. Another factor is the increase in distribution reach, which in turn will improve the growth rates. Capital Food reaches about 3.5 lakh million outlets in India, whereas Organic India has 24,000 outlets. TCPL itself has a reach of more than 3.8 million outlets. So both the acquired businesses have a lower reach in the modern trade and e-commerce front, whereas TCPL on the other hand has a 27% revenue share from the modern trade and e-commerce. More so, there are cross-selling opportunities for TCPL given that Organic Foods has a large presence in the export market and TCPL can develop a farmer channel for Organic India's robust product portfolio. Let's look at the earnings picture, which shows that the acquisitions could achieve EPS break-even in the second year of the operations itself. As for the outlook as well as valuation, strong double-digit growth is likely due to the distribution expansion following these acquisitions. Growth categories will account for about 30% of TCPL's India businesses as compared to the 20% currently. And top line and EBITDA margins would be growth accretive for TCPL, which is why investors looking with a long-term view can add and accumulate TCPL as a stock. With that, it's a wrap. Thanks so much for tuning in.